So there's nothing worse than getting blindsided by a big tax bill. But is owing a big tax bill at the end of the year actually the sign of a bigger problem? Today we're breaking down the penalties associated with tax under withholding and how you can game plan around them. You don't want to miss today's video. If it's your first time here, my name is John Boyd. I'm a certified financial planner and I'm the founder and lead wealth advisor at Modern Wealth. If you like today's content, be sure to hit that like and subscribe button so that you can keep getting content just like this. And of course, if you need help with your own financial plan, reach out to us at www.modernwealth.com. That's modern spelt with no vowels, wealth.com. So most taxpayers are familiar with the concept of receiving a tax refund where you've overwithheld or overpaid your taxes throughout the year, and the IRS returns the excess money to you in the form of a refund. Tax under withholding, on the other hand, is the exact opposite scenario. It occurs when individuals don't withhold enough taxes from their income throughout the year. Aside from this resulting in you potentially being blindsided with a larger tax bill, it can actually result in you paying additional penalties and taxes. Now, you might be wondering, if I can pay the IRS when tax time comes, why should I withhold more throughout the year? I mean, this is a common question, but it's essential to understand that the U.S. tax system operates on a pay-as-you-earn basis. The IRS expects taxpayers to pay their taxes as they earn income, often through quarterly tax payments or tax withholding from W-2 income. Failure to adhere to IRS underwithholding rules and not paying taxes on time can lead to underwithholding penalties. As of the recording of this video, the IRS charges an interest rate of 8% on tax underpayments, and it compounds daily. So the name of the game is, how can we pay the IRS the least amount possible throughout the year without paying additional penalties? And as we go through today's video, you're going to learn exactly how to play the game. So in order to play the game, you need to know what your minimum withholding requirement is. To determine how much to withhold throughout the year, you can use the IRS's safe harbor numbers for estimated tax payments. The safe harbor numbers are the minimum amounts you should withhold or pay in estimated quarterly taxes to avoid underwithholding penalties. You can calculate your safe harbor number utilizing one of the following methods. Method number 1, withhold or pay in estimated taxes 90% of your current year tax liability. Method number 2 is withhold 100% of the tax you owed in the previous tax year. A little side note on that second method is if your adjusted gross income on your prior year tax return is over $150,000 for a married couple, $75,000 for those filing separately, this number is 110%, not 100% of the prior year tax liability. So I know this is a confusing topic, so let's break down two different examples to bring this all home. So example number 1, you have a couple filing a joint return with AGI of $100,000 in 2022. Their federal tax liability is $10,000, and this can be found on line 24 of their 1040. Now let's fast forward to 2023. Their AGI increases to $135,000, making their federal tax liability $16,000. In order for them to avoid underwithholding penalties, they need to withhold from their paychecks or pay quarterly estimated taxes totaling either 90% of their current year tax liability, which is $14,400, or 100% of last year's tax liability, which is $10,000. So let's look at a few different withholding scenarios to help you understand this. If they withhold $12,000 from their jobs throughout the year and owe an additional $4,000 at tax time, does that mean they owe penalties? The answer is no, they won't incur penalties because they followed the safe harbor rules. They withheld more than 100% of the prior year tax liability. Now, what if they withheld $7,000 from the jobs and owed $9,000 at tax time? Will they owe penalties? The answer this time is yes, because they withheld less than their safe harbor numbers. Now let's look at one more example, but this time we're going to look at a couple who is a high income couple. And as you may recall, high earners adhere to a slightly different set of safe harbor rules. This time we're looking at a couple filing a joint return with AGI of $250,000 in 2022. Their federal tax liability is $43,000. In 2023, their AGI increased to $300,000, making their federal tax liability $54,000. In order for this couple to avoid underwithholding penalties, they need to withhold from their paychecks or pay quarterly estimated taxes totaling either 90% of their current year tax liability, which is $48,600, or 110% of last year's tax liability, which is $47,300. And this is because their AGI exceeds $150,000. So again, that is why they're utilizing 110% instead of 100%. So now you know how to calculate how much you need to be withholding, but how exactly do you plan around it? For most individuals with W-2 income, determining how much to pay in taxes throughout the year involves checking how much is already being withheld from your paychecks. The IRS tax withholding calculator can help you assess what your projected tax withholding for the year is going to be. If you find you need to withhold more, you may need to complete a new W-4 form to request additional tax withholding per paycheck. For self-employed individuals, such as a single-member sole prop LLC, quarterly tax payments are typically required since they lack payroll. However, single-member LLCs filing as an S-corp have a little bit more flexibility. They can choose to withhold taxes from their salary and or pay quarterly tax payments. And again, this flexibility exists because the IRS accepts both payroll withholding and quarterly tax payments as valid methods to prevent underwithholding. Finally, the million-dollar question is, how much should you withhold in taxes throughout the year? Ideally, you should withhold the minimum amount required to stay compliant with your safe harbor numbers. This allows you to earn interest on the money you would owe the IRS come tax time and then pay the difference between your tax liability and withholding. However, not everyone has the discipline to set aside the money and not spend it. Some individuals just prefer the peace of mind that comes with withholding more. Ultimately, it's upon you and your personal preferences on how much to withhold. If you're still feeling overwhelmed by tax planning and avoiding underwithholding penalties, consider getting a comprehensive tax plan which covers these issues. If you don't have a comprehensive tax plan, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. It's been a ton of fun, guys, and I will see you next time.